Hello guys, uh, I make this video regarding my last post in eToro. So for those who wants to follow me on eToro and maybe copy me, I will share my account in the description of the video. But regarding my post, I just asked the social network eToro if someone wants to know more information about the fair value of a company, and I have been asked different companies, and I'm choosing to do a full review of the best ones. So the application I use is Yahoo Finance. I don't pay for it. They have full information about last quarter on the platform. If you really want to go into it, you can open the Renault. For example, if this we are looking at the Renault, you can open the Renault investor relationship website and start looking the information. You will see it's the same information over there. So that's not really the point. That's why I'm using just Yahoo Finance. I really trust the information here. Just not necessary to pay over an application that doesn't have anything in additional. So let's do little research about the company. So the company has been with market capitalization of $10.5 billion. Enterprise value is valued of 55.02 billions, and we are looking at implied shares outstanding. This means that not only the outstanding shares, but also those there are some preferential shares that, for example, management has. So this is the total amount of shares. The easiest way to calculate fair value, I mean, that's not for all the stocks, but that's the basic principle. You just calculate the enterprise value. You can go over to Google and see what the enterprise value represent. You see exactly. So we divide by the implied shares outstanding, which is 290 millions, and we see a fair value price of $189.70. Okay. When we go to do a deeper research of the company, you can see they work on a really small profit margin. They have some small operating margin. I mean, this is quite normal for a company in this sector, which is car industry. What I don't like is return on asset. It's pretty low. You can, I say once again, you can go over to Google, for example, and look what exactly those values means, what these words mean, return on assets and return on equity. You can see exactly what those number represents. I mean, this value can be at least 5, 15, 20%. Also, return on equity is not pretty high. So current price of the stock is $35.61 per share. Further we can see the total debt of the company is $64.68 billion, which is a little bit over the enterprise value. So basically, what does it mean? That the company itself, the enterprise value, is based on their debt. Okay, so That's it's a good thing, it's a bad thing. How to say, it's good, for example, if the company is like 10 billions, to have 10 billions of debt, right? But if the enterprise value is like 55 billions and we have debt of 64 billions, that's a little bit to worry about. So maybe the value, the fair value is 189.7 dollars, but not really. So let's check some other things, um, other methods. So we can use the EBITDA. We can use, which is this is, you can also go to internet and look what EBITDA means. This is basically after the depreciation, so devaluation of the company assets, so depreciations and so on. After the taxes, this is basically their net profit for the quarter. This is about the quarter. So let's calculate about this. If this is 5 point billions, oh yeah, billions, let's divide it to the implied shares outstanding, which is 290 millions. And the fair value here result as 18.37. So on one method, how you can see the price is way undervalued. On the other method is way overvalued, right? So there is no exact method about this. What we can do actually is go to another company. Let's find Yahoo Finance. Let's check, for example, Volkswagen. Let's check Volkswagen, how their stock is moving. Go to the statistic. Let's check here how it's going. 179 billions and divided by the implied shares outstanding. $340.95 dollars per share, right? Again, way over. The rest of the values are quite the same, similar to the Renault, right? Profit margin, operating margin, return on asset, return on equity, values are quite the same. Okay, so let's go and check the EBITDA method. Let's see, 20. How you can see here actually, we can see the debt. This is the gross profit. You can use we will use also the gross profit. Maybe we can find some fair value here from the gross profit. Let's go into it. In the Volkswagen, right? Volkswagen, their total debt is 229 billions, right? Again, over the enterprise value. So let's use the EBITDA method and switch to the gross profit method and see what's the difference. We may find some solution. I mean, the fair value should be closer to the current price of the stock, right? This is what we are trying to find. Divide by the outstanding implied outstanding shares. we see here a price of 44.94 USD per share. Okay, so if we use the gross profit, we probably will be on the right way. So let's check the gross profit. All right, implied outstanding shares 93.9495, okay, dollars. So yeah, probably this would be the best method for this kind of company. So the price, how you can see, is overvalued. And let's check for the Renault as well. Gross profit divided by the implied shares outstanding, and we have here a fair value of 31.75 dollars, right? So what I have answered in the eToro, it was the enterprise value divided the implied outstanding shares, which is way over the current price. So this company would be actually overvalued at the moment, because the method you should use here is the gross profit divided by the implied shares outstanding. So it's how I said, the most common method is enterprise value divided by the implied shares outstanding. There is another method with the EBITDA, and in this case, this third method, the gross profit divided by the implied shares outstanding. So this is just an example. Let's switch to another company that I mean, if we want to actually have a deeper research of the company, I would suggest to go to, for example, look the conversations, go to the investor relations website of the company, look the latest information, latest posts of the company, what they're saying. Notice that on internet, if it's not an official website, like 90% of the information is very wrong. I have found good applications like Seeking Alpha, if somebody knows about it, that they really post stupid information, wrong information, misleading information. So don't trust anything that is not really official. Go to, for example, Renault investor relations, and you can go directly to the investor relations materials and check here for updates, check here for materials. I'm not sure, I have never been opening this website, but for example here, maybe browse innovation. Why I don't find it? Earnings report, full year, documents and presentations, for example, right? And here, this is the official site of Renault Group. This information is posted by the company, directly by the company, and this cannot be misleading, right? So check your information by reliable sources before you start investing. So because I also posted on the eToro different kind of fair value. So everybody can be wrong. Everybody can be wrong. Check it by yourself. Learn to how to really trust the information and which information exactly should trust. Yeah. You can download files. You can check really the reports here, financial results. Here, like I said, the information should be equal to this in Yahoo Finance, financial outlook, um, how the brand is going, um, yeah, volumes, how many units they sell in which country, and so on and so on and so on. Plenty of pages to read. You just have to know which information is most important one. Revenues. Here is a comparable revenues for this should be Q1, right? For the period for 2023 2022, you can see how the company is growing over the year for the same period. So this is what I want to say about especially about Renault, right? And there is someone who asked me about Nestle, which is a pretty nice company. If you want to actually have a really good diversified portfolio, you would like to have companies in different sectors. The principle of that is like basically when one sector is going down, not all of the sectors are going down, right? So the rest of the sectors should compensate your losses actually over the time. So we can check here the three methods also with Nestle and see the difference. So we have 375 billions divided by the outstanding shares, implied outstanding shares, remember, 2.68 billions, and we have a value of 140.26 dollars per share. So with this method, the price is undervalued. Current price of 113 is undervalued, but let's check the rest of the methods. So what I wanted to also say, because I forgot, I mean, these methods are really useful when the company is profitable, right? Like in this period of time, we can see the profit margin, the operating margin, everything is positive. There is nothing negative, so company is making profit. This is the basic thing. Let's check also the total debt, 59 billions, right? So this is just, how much is this? It's not even 1/3 of the company, 60 billions. It's 1/4, something like this, right? It's not really important, but you can see the compared to the car industry, what's the difference. So this company can have total debt, bigger total debt, right? They can afford to have more debt, but they choose not to. So let's go to the other method. Let's choose the EBITDA method. Billions divided by the implied outstanding shares, which is 2.1 billions, and you can see a price of 6.9 USD per share, which is not really accurate. You see the very big difference. So let's switch to the gross profit, 43 billions divided by the implied outstanding shares, and we can see also fair value here by this method 16.06. Okay, dollars per share, which is also not quite accurate. For example, to be sure, always double check with another company in the same sector. So what's Nestle sector? This is food industry. So at the moment, I don't really know which company to use, so I just Google it. Food industry company to invest. Okay. All right. Kraft Heinz. I would choose General Mills to compare with. So let's go General Mills, Yahoo Finance. Yeah, we can see also here on the profile of the company if they really, because I'm not very familiar with the company. So let's check the description. General Mills manufacturer and market branded consumer foods worldwide. So yeah, it's similar. Yeah, there is nuggets, gusher, a lot of bunch of things, cookie, cocoa. So basically same sector. We don't really need to have the exact match, just have to be really similar to it. So let's switch to the statistics and check what's the difference between the fair value of this company. Let's go over it to the three different methods now. Billions, the enterprise value, divided by implied outstanding shares, 576. We see a fair value of 83.13 USD dollars per share. So about this method, yeah, we can see that the company is undervalued as well. So let's switch to the other methods and check what's the difference. I guess this is the correct method because the value is the quote is more real to me. Looks in the same range of the price, so this should be. So let's check the other methods. EBITDA method divided by the implied outstanding shares, 7.9. It's unreal, right? Gross profit 65 billions divided by the implied outstanding shares 576.4. Is this correct? Let's check again. 65 billions divided by implied outstanding shares 11.36 USD dollars per share, right? So yeah, I would go with the enterprise value by the implied shares outstanding would be more accurate one, just because the range price is there. It cannot be like double. Just that's impossible. Nobody will let a company do that, right? So the company is also very profitable. Let's compare it. Let's compare the profit margins, operating margin, returns of asset, return on equity with Nestle. and to see which one is better, right? Because we are investors, we are looking always for the best. Both companies are quite undervalued, and profit margin of Nestle is just 10%, General Mills 12%, just 2% more. Operating margin 16.8%, 18.75%, again better. Return of assets 7.4 of Nestle, 7.1. This is not a big difference. Return of equity of General Mills 24.6, return of equity 24.3. So very similar values. I would choose because they are both, the companies are both undervalued. I would go and check what's the dividend, which company pays better dividend, to choose where to invest. If I don't want the dividend, I just invest for the growth of the company, I would of course choose the one with better stats, which is General Mills. Enterprise value divided by EBITDA 10.7. This is way worse. So yeah, definitely General Mills is a better company to invest at the moment. So next quarter, maybe the company will change the values. So you can see we have quarter revenue growth of Nestle, but of General Mills is negative, right? But one quarter actually doesn't represent the entire company. If you want to go deeper in the research, I don't want to do it right now. Deeper in the research, you just go, like I said, go check the conversations. There is on eToro, you can also check the conversations about the company. I mean, this is not like a reliable resource, but you can still read it. Somebody is mentioning something, they speak about the company, you can see the dates and so on and so on. Yeah, the latest post here is from when? 20th of September 2023, I guess. Yeah, somebody answered to someone. So like I said, if you want to look at reliable information, just go to the website, to the official website of the company, and check what's on the investor relations website. This is the most reliable information about. Don't trust applications, don't trust trading gurus. Trust yourself, and that's it, guys. That's it. So I hope you like the video. Comment, follow, subscribe. If somebody wants to do some deeper research on a particular company, just let me know. I'll do it for you. I like to do it, actually. I just like to do it. That's why I'm posting this stuff on eToro. Just if someone wants to have more information about the company, I would like to know what you're looking at. Maybe I can find a company also to invest, because there are thousands of companies. I cannot follow every one of them, and this is a way to be like to have a lot of eyes following companies, and just you're letting me know which one is better, right? You are on the spot, you are following some company, you mention it, I check it. I also while like while I'm checking Nestle, for example, I discover General Mills, right? And I discovered that it's actually a better company to invest in. So just let me know. Yeah, don't forget to subscribe, follow. If you want, you can copy me. I will post my link about copying my profile in eToro and so on, guys. So wish you profitable trading. Thanks for the attention. Goodbye.